Hi all, welcome to my channel Satish Vlogs. In this video, I would be providing details on depreciation. What is a depreciation? What are the journal entries for depreciation? How this depreciation should get reported in financial statements? All these details I would be providing in this video. As everybody are aware, the value of the assets would get reduced because of the various factors like obsolescence, wear and tear, etc. Right? So depreciation is an accounting method which allocates the value of the asset over the life of the asset. Okay? And the concept of depreciation is applicable for the tangible fixed assets. And this depreciation is a non-cash expense, which means there will not be real outflow of the cash from the business entity. This depreciation would be charged as an expense in the income statement, and there will be a tax benefit out of it to the business entity. And also the prominent methods for charging the depreciation are straight line method and the written down value method. This depreciation would be charged in such a way the benefits which are going to get generated from the fixed assets would get equates with the charge which is going to be made in the income statement. Okay, with this introduction, let's move to the next slide of my video. In this slide, there is a diagram which depicts like a cycle. This is nothing but the accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? All these details I had already provided in my previous video on accounting cycle. And also, this depreciation would get charged on the tangible fixed assets. So, what is a tangible fixed asset or fixed asset? What are the journal entries for fixed assets? How this fixed asset should get reported in financial statements? All these details even I had provided in my previous video on fixed asset. And for both these videos, I would be providing the links in the below box. Request the viewers to go through those videos before getting into the details of the current video on depreciation to gain better understanding of the current concept. Okay, as mentioned in my previous videos, I would be explaining the concept considering the phases of an accounting cycle. As a first phase of my accounting cycle, which is a business transaction, depreciation expense is a business transaction. Okay, hope this is clear. Let's move to the second phase of the accounting cycle, which is a generalizing phase. As depreciation is a nominal account, what is the rule for the nominal account? Debit all expenses and losses, credit all incomes and gains. So as depreciation is an expense, so depreciation account should get debited. Okay, and to which account we are supposed to get credited? Which is a accumulated depreciation account. What is accumulated depreciation account? This is a temporary account which has been created in for the better presentation in the financial statements. Okay, and whatever the amount which gets accumulated under accumulated depreciation account, which would get reduced from the cost of the tangible fixed asset in order to show the net value of the tangible fixed asset. Okay, so hope this is clear. Let's move to the third phase of my accounting cycle, which is a ledger postings phase. What is a ledger posting phase? For whatever the entries which were made as part of generalizing phase, for those accounts, the ledger accounts are supposed to be created, right? And the entries are required to be posted accordingly. What were the accounts which were created as part of my generalizing phase? Depreciation account and the accumulated depreciation account. Now, these accounts are supposed to be created in ledger posting phase and the entries would get posted accordingly. Hope this is clear. Now let's move to the fourth phase of my accounting cycle, which is a trial balance phase. What is a trial balance phase? Which is nothing but the summary of the balances of the various ledger accounts. See, for how many ledger accounts were being created as part of the third phase? There were, for two accounts, the ledger accounts were created, right? One is the depreciation account and the other one is the accumulated depreciation account. The balances for these two accounts should get updated in the trial balance. And the balances which are shown under the debit side should get matches up with the balances which are shown under the credit side, because as we have been following the double entry system of accounting, there shouldn't be any discrepancy between debits and credits. Okay, hope this is clear. Now let's move to the last phase of the accounting cycle, which is a financial statements phase. What are the primary elements of the financial statements? One is the income statement and the other one is the balance sheet. In the income statement, as mentioned previously, this depreciation being a nominal account, it should directly hit the debit side of the income statement. Okay? And in the balance sheet, whatever the accumulated depreciation, that we consider it as a contra account. And whatever the amount which gets accumulated as part of accumulated depreciation should get reduced from the historical cost of the tangible fixed asset, and the balance we would be showing as a net value of the tangible fixed asset. Okay, hope this is clear. With this, I hope the viewers are able to understand what is a depreciation, what are the journal entries for depreciation, how this depreciation should get reported in financial statements. If you guys really like my video, request you to like it, share it to your friends and subscribe the channel for more videos. Thanks for watching. Catch you in the next video.